Hey guys, Kunal here, Bulls on Wall Street. Hopefully you guys are having an awesome trading year for 2023. It has been one for the record books when you're looking at NASDAQ stocks and tech stocks in general. I believe we're having the third biggest run of all time in the last X amount of years in the tech stocks. And we've seen that over and over with all these large caps flying around. So today I want to talk to you about the top 3 trading setups of 2023. I'm having a fantastic trading year, but then of course I've had fantastic trading years in 2022 and 2021. One of the things that happens as you become more veteran is you're able to adapt to every single market. But the one thing that I have learned over the years is that when you change market cycles and you change the trading years, the patterns that are working will start to differentiate. So for example, all like the hot trading patterns and things that were working in, say, COVID times, right? They completely stopped working at the last half of 2021, and they were like actually working in reverse in 2022. And a whole subset of different type of patterns started to emerge in 2022. And we were able to hammer those consistently, and now lo and behold, the market has changed again. And in 2023, these 3 patterns have been money makers day in and day out. In this video, guys, I'm gonna go over 2 day trading patterns and 1 swing trading pattern on what has been working for me in 2023. I would say 75% of the cash I've made has actually come from these 3 patterns. So stay tuned. This is going to help you really end 2023 with a bang. So let's talk about my favorite trading pattern that I've been using right now. It is a day trading pattern that is used on momentum stocks, and it's something that I've been using every single day. So this setup is called a red to green trade. A red to green trade is a continuation play for something that you like on a daily chart. So what I mean by that, that's a lot of mumbo jumbo, right? But what essentially a red to green trade means is when you have a stock that's got serious momentum on the daily chart, it's either a trending name, something that's trending like a Meta or a Tesla, and it's starting to break out big, or it can be something that's in a pattern right now that is about to go. So it can be something that's in a swing trading pattern and you're eyeballing it for an entry, and you can use this setup. So first, let's talk about the mechanics of the setup. So the red to green trade, to actually be able to find this setup, you need to first look at the daily chart on a particular stock. I have 2 different instances where a stock would qualify for a red to green trade. Number 1, it could be a stock that's just got huge momentum the previous day, and then when it opens weak on the day, meaning it's red on the day and it goes green, I'm gonna hit it, and it's a continuation play for the next day. And so if you look at a trade that I recently did on CVNA, CVNA had a huge up day into a breakout spot. And what you saw on this particular day is the second day as it was testing resistance, it opened weak on the day, and it sat there and just grinded it in the red zone for like 10, 15, 20 minutes. And it stayed weak on the day, meaning it's actually down on the day. And it got down to about 1 or 2%. And then it started to round. And when it went green, the stock ended up exploding, and you had this huge run into the mid 30s and took off. And I made a video on that specific trade a couple weeks ago. You guys can check that out into the particulars of that trade. But the trade I want to talk to you today about, this setup you can do every single time. So this is a stock called BABA, right? So what do you notice on BABA? So this stock has been basing out for a long period of time. Then what you see is it starts to develop what we'd call a flag pattern. it starts to really tighten its range as it sits around in that low 90s spot, and the pattern starts to really congeal. Guys, the rule of thumb of stocks is that stocks get their power from these tightness of range. When stocks base out and the ranges tighten, they build explosion for the next run. So BABA has this epic look on the daily chart. You have yourself a flag pattern. Then what starts to happen is during the trading day, if you look at the open, it just spikes down a little bit. It's down like 0.5% on the day. And then you start to round and it breaks over this dotted line, and that's the red to green trigger. On TC2000, there's a dotted line that says exactly where the previous day's close is. When that stock breaks over that level, you want to buy it and put a stop under that candle. So this is a low risk trade. And why this trade works so good is it catches people off guard. See, when you have a setup like BABA or a CVNA and it looks ready, but it's been just kind of dormant for a period of time and you get this like consolidation, when it opens weak on the day, people forget about it. They're like, I guess this thing's not gonna go today. This is just not the day for this stock. And so people lose track of it at the open and they start diving into all the other stuff that's spiking up, right? People love to chase. So you'll see all these other stocks spiking up. So that's where their attention goes. And then what ends up happening is as this stock starts to just marinate a little bit under that red to green spot, as soon as it crosses over, all of a sudden everybody's alarm bells, everybody's alerts start going off, and then the squeeze is on, and this can cause huge shifts in a particular name. Because oftentimes you have people shorting the stock because it's weak on the day, but also you have people that are dormant and not even paying attention to it because it's weak on the day. So when that thing shifts and it goes green, all of a sudden the floodgates can come on. I use this setup every single day. The second setup that I want to talk to you guys about is an ORB setup. ORB stands for opening range breakout. This is my favorite momentum technique to use at the open on stocks that gap up. So a red to green trade is what? You're adding the stock, but it opens up weak and then it's going green. So it's showing no signs of momentum in the morning. And ORB is completely different. The interest is already there in the pre-market. The stock is going to gap up and then the race is on. The thing with ORBs, there's some basic ground rules that you've got to follow. First of all, opening range breakout means that you need a minimum of 3 candles that are going sideways under the opening range to buy this name. So a perfect example is a trade that we took on UPST today. So UPST is a stock that I really like on the daily chart. So if you look at the daily chart, you've got this awesome flag pattern. It had a huge run, and then you had a low volume 3-day pullback to the 9 EMA on the daily chart. That's a picture perfect pullback. It's orderly. It's coming down to the perfect level of support for a momentum trade. So I love this pattern on the daily chart. So now I want to intraday trade this. So what you see today in the morning is UPST has this little spike up right up at the open to that kind of 56.20 range. Now you don't want to buy that first candle. Anytime I personally buy stocks the first candle, unless it's a red to green trade, it typically ends up being a dud. When you buy high, you die. Buying stocks that first candle, it's like chasing unicorns. Like, it just sounds great in theory, but it really never works. Some of my biggest losses in my trading career have been because I bought that darn first candle because I got excited, or I thought, hey, this stock has like this epic PR, whatever, right? And the chase is on, and I dive into it, and then it just kerplunks on me. And you've seen this over and over, right? In the small cap community, they call it getting rugged, right? In cryptos, they call it getting rugged. And it's like you buy that first candle, it looks all juicy McGee, and then whoop, the rug is on, right? And next thing you know, you're watching Netflix the rest of the day, eating ice cream, watching Rachel McAdams movies, thinking about where your life went wrong, most of the time it's because you bought that first candle. The ORB, you need minimum 3 candles. So if you look at UPST, let's really dig into this. All right, what do you notice there? It's hitting that 56.20. And then the second candle is kind of marinating there. And the third candle is marinating there. And that 9 EMA is just tightening up on it, right? When the 9 EMA tightens up on a stock, that VWAP tightens up on a stock, it's starting to build up pressure. So now when it takes out that 56.20, 56.30 zone, what do you got there? Boom, first candle, MPC. Second candle, double MPC, right? You start pushing into that 57, 58 zone, and now you're off to the races. So that's the ORB setup. Now for me personally, when I get 2-to-1, 3-to-1 reward to risk, I want to sell off a partial of the position and then I scale out of the position accordingly. So in UPST's case, I added this at 56.20. I put a stop right under my 9 EMA. So my risk is fairly limited. You know, you're trying on a $50 stock, not to really risk more than like say 50 cents. You want to get yourself a really good entry and then it's just a matter of scaling out. Now I will admit this, to my shame, I pikered the crap out of this, man. I was so happy. So I was trading options contracts on them and they had already almost doubled and I was already in the celebratory mode and I was out of my last shares around 59 and this thing kept going and going and going and going and going. And a mistake that I made, if you're looking at this intraday chart, what do you notice? And this happens with a lot of trending stocks. They will follow their 9 EMA intraday in the morning if you got a really steep trend and you got to just be really focused and trail your stop right up under it. My mistake on this trade was I oversized this thing. You know, I ended up with like 50 contracts and a couple thousand shares in a different account. I had so many damn shares of this thing that I started scaling out so fast because, you know, I was already calculating. I don't keep my P&L on my trades. But right, anybody that knows basic mathematics knows like how much money you're making. I got super pumped. I was like, boom, I'm scaling out these things a little too early. Next thing you know, I'm out of shares. Always remember the cardinal rule is keep a quarter or keep a third of your shares and trail it up that 9 EMA. When you get a trending stock, especially in a trending market, it's going to pay you more than even your original shares. If I just kept, say, 1,000 shares for the rest of the day while it's trending up those EMAs, right, I would have made an extra $4,000, $5,000, right? You can essentially double your profits or, right, even a little bit more sometimes. And that's something that we always have to be mindful of. It's great to have quick money, but you do want to do a great trade. Just because you make money in a trade doesn't make it a good trade. I will say my entry was perfect, but my trade management, I'd give it a C plus to maybe a C standard. I made some good money, but I left too much on the table, right? And we don't want to do that, right? If you leave more on the table than you actually took, then it's just an average trade, even if you made some good money. So I love that ORB trade. You can also do this on the downside. You know, we do this on stocks that have like bad earnings out. Check out Spotify today. Spotify got dusted on its earnings. What do you notice on Spotify? It gaps down. Now you got the first candle, second candle, right? You're building out some range in that first half hour. Boom, it kerplunks under there. Next thing you know, it starts trending down the rest of the day. So you can do this stock with great daily charts, or if it just has some type of news out like Spotify did, and 3 candle minimum. So it may take 4 or 5 candles, but it's 3 candles minimum. Don't get stuck on that first or second one. It's going to cost you a lot of money. Now, let's talk about one swing trading setup, because all you guys can't be day traders. And frankly, in a hot market, you should be doing a little bit of swing trading also, because stocks are trending up so much. As day traders, we often get caught in the weeds. Like we're taking 30 cents, 50 cents here, and next thing you know, like the darn stock's up 10 bucks, 20 bucks. You're sitting there like, shit, if I just held this thing, I would have made a lot more money, right? Anybody ever do that? Like you take all these trades. I've done this so many times. I'm taking all these trades. I'm wheeling and dealing on my intraday trading. And then I'm like, man, if I just bought 1,000 shares of Tesla in the morning and held it the whole day, I would have made a lot more money than if out of the 100 trades I took. And so we got to always be mindful of these things. It's good to do a little bit of swing trading. I don't like to cross swords, so don't pee where you eat, meaning like don't swing trade and day trade out of the same account. It's a nasty habit because it'll be hard to track your results, but also what typically happens is if your day trades are good, but your swing trades are not, then your account might be down and then you're in a pissy mood even though your day trades were up. And swing trades often take time, right, to congeal and do their thing. So don't cross swords unless you're, drunk with your buddies and it's your high school reunion or something. Don't even do it. Keep everything separate, keep everything kosher. But swing trading is an awesome thing in bull markets. It stinks in other markets, but bull markets, it's awesome. It can pay you. So let's talk about the #1 swing trading setup in 2023, not just by me, but it should be for everybody. And this is trading earnings breakouts. So what is an earnings breakout? An earnings breakout is a breakout in a stock post earnings. So when a stock announces its earnings, you get this gap up. So check out PLTR. Check out UPST. They announce their earnings, you get these big gap ups. Now, I'm not chasing it the first day of the gap up, but watch what happens as they start to pull back to that 9 EMA and that first consolidation. You want to hit that. So PLTR, it pops into that 8-9 range. Look what happens the next few days. It pulls back into that 9 EMA, it starts to hold, and it builds out a flag. You can purchase it either at the 9 EMA or on the break of the earnings range, and you're going to get monster pushes because you're marrying technical analysis with something that's fundamental. UPST is the same thing. Look what happens on UPST. It's the hottest stock in the market the last few months. And what have you noticed here? The earnings day, it pops up into the 19 range, then it pulls back for a few days, right into that 9 EMA. When you get the green candle, hold at that 9 EMA, you can purchase it, put a stop loss under, and now you're in it. If you want a little bit more confirmation, if you're one of those people, you want to be president of the Confirmation Society, then you can buy it as it breaks that earnings high around 19, and then you're in it for the next run. Now, the beauty of earnings breakouts is it's not just a one-trick pony. You can keep trading these over and over. Now, on a swing trading basis, you're in it. You hold that thing, let it ride up to 9 EMA as long as you can go. But if you're day trading, you can keep day trading this thing as long as it's trending. And then also, after you have an earnings breakout, you're going to have secondary breakouts. So look at like UPST. As it pushes into 40, it consolidates for a couple weeks. And then what happens? You start to build out that level at 40, you're testing it, and then bam, you're into the 60s in a hot second. That's the power of earnings. You don't just go from $15, $16 to $64 is what it hit today based on drawing some squiggly lines on a chart, right? That's all, right? Just because we're a bunch of line drawers doesn't mean we make money. We still have to think about the market in different ways. That earnings breakout is the catalyst that we need to get these things going. And then we use our technicals to corral the power of the earnings and then play those secondary pushes. Beyond PLTR and UPST, there's been dozens of these. Study this pattern. Any stock that's built a base, that's gapped up, look at that first consolidation and see what happens. Check the volume. Want to see some expanding volume and some other things. It's going to blow your mind, but it's the most powerful setup in the market. You guys got to be doing it. So guys, hopefully I gave you a whole host of things to think about. 2 hot day trading setups, the hottest swing trading setup, and a whole couple nuggets that I think you should let marinate in you. This is a great market to learn how to trade stocks because you've got beautiful trends everywhere and you've got a lot of momentum. Let me know if you have any questions. I look forward to hearing from you. Make sure you smash that like button and let me know what you think. Take care.